What's going on, guys? It's GBP baby. Welcome back to another video. I hope everybody's doing well, and let's get straight into things. So hopefully you've watched this week's videos, especially yesterday's, as I explained what I wanted to see. But you can see we're here on the daily on dollar, and you can see how we traded up into a 4-hour fair value gap just as we anticipated. We traded up, taking out a lot of these highs right from last week, just as anticipated. We're coming back to the weekly fair value gap right now, but let's roll down to the 4-hour just to get a better look, and you'll see the 4-hour fair value gap that I drew our attention to in yesterday's video. Now you'll see we traded to 50% off that. That's what we call consequent encroachment, so just get that delineated like so. You'll see our price traded perfectly to that before turning around, leaving it and trading back down to this level right here. Now what you'll find, if you've watched my trade execution video from today's price action, you'll remember me calling out this level, saying that price is likely going to want to draw back into this, and like I said, heading for this high. Now why is dollar going towards that high? Well, we have a low, we have a high, we have a lower low, and then price has moved higher since. So this level should be considerably sensitive to, and that's because this is the breaker. We have a low, we have a high, we have a lower low, and then price has broken out to the upside, meaning that this last up close candle should act as a breaker, meaning that we can start looking for buys as price trades back down into this, assuming we are to remain bullish. Now the whole week has been a lot of back and forth price action. As you can see, even today we traded aggressively higher in the morning, continued rallying right into New York, running out the stops as expected, and then had a turnaround straight away. But what I now have my eye set on is definitely this 4-hour fair value gap right here. So I want to see how price acts within this. Now I'm going to keep this level delineated just because this, like I said in the trade execution video, this should be sensitive to price, as price will use this as like a reference point to send price higher. Price should then respect this fair value gap on the 4-hour as well, so we're going to keep that drawn out, and preferably price can remain within that, moved into the new day, before then again trading higher and running for these stops, and eventually the buy side liquidity residing up here. Now let's go to the 1-hour, and then you can see I've got the daily dividers delineated, and you can see our price traded right through out of the Asian session into the London session, trading up and rallying into that fair value gap, taking out these buy stops. So now that these buy stops are met, like I said, I expect price to want to come back down into this fair value gap, lining up nicely with the last up close candle before the down move. What do I mean by that? We got a low, we got a high, we got a lower low, and then price is broken to the upside. So where is the last up close candle before price broke lower before breaking higher? We have this candle here, and if we drag out that 4-hour fair value gap, voila, you can see that lines up perfectly with that. So again, as price comes back into this range, we can be looking for longs on dollar with expectations to hunt for shorts on euro and GBP. Now moving more deeply into this as well, so long as price continues to show support at these order blocks here and here, we can look for longs, but do just be wary and be aware that if price does fail and trades through this, disrespecting these order blocks, then we may have to reconsider our options. But preferably I'd like to think that price can remain strong and use this to propel price higher. So as you can see, this week is going pretty much to plan. If you've watched my weekly review, we came lower, traded down to that weekly consequent encroachment as anticipated, traded higher up to this 4-hour fair value gap as anticipated. We're now coming back down to the breaker, so let's see, can Thursday provide us that breaker turnaround with a continued run higher into buy side liquidity. We'll go to the 15-minute just to get a better look at price. Again, rallied right into that London session before turning around, had a nice break in market structure here, and trading lower back into this range, and then since we've just been consolidating. So definitely keep an eye on this 4-hour range that I've got delineated in blue right here. So yeah, that's pretty much everything on dollar. In terms of tomorrow, again, low of the day I'd like to think can be made within that 4-hour fair value gap, with the high of the day aiming for Wednesday's high, up here, and then potentially this high all the way up here. So definitely have these levels marked out on your chart, and especially keep that 4-hour fair value gap marked out, because we haven't actually filled that completely yet. So we've got 2 levels of buy side liquidity that we should be aiming for, assuming price wants to remain as strong as it is. So lovely to see. Let's now go on to the GBP USD. We'll go into the daily, and what you'll find is that GBP didn't move as much as we saw GBP didn't move as much as we saw euro move. So we can get rid of this now. But you can see Wednesday price traded down through the daily fair value gap. Remember I was saying I wanted to see this get traded to. Beautifully, we traded down right through it. Where did we trade to though? You can see if we look at consequent encroachment of this, you'll see we traded pretty much to that. In Mohawks, just a little bit over it, nothing to be concerned about. So moving to the new day, I'd like to think a continuation to the downside would be necessary. Furthermore, we can start looking at this wick from Tuesday now, and we can look at the midpoint of that, because this up close candle on Monday is now going to be a bearish order block. We traded through it on the downside, so this should now act as a bearish order block. But what I'm going to do specifically is I'm going to look at the midpoint of it. So let's just get that delineated of this. And what this will do is it will give me a maximum level that I'm anticipating price to trade. If we're bearish, price shouldn't trade any higher than this midpoint, because that's what we call mean threshold of the bearish order block, and price should therefore respect that moving into the new day. So we got that delineated in red now. Now let's go down to the 4 hour and see what that lines up with. So you can see here's that ugly consolidation that we had yesterday. We have a nice fair value gap. Sorry, not yesterday, earlier on in the week. There's that level I just delineated for us, and we have this fair value gap right here. So price very well may continue to trail its way up, but overall moving on into the new day, I'd like to think that we can trade back into this daily fair value gap, and you can see we're now starting to develop relative equal lows below here. So sell stops and sell side liquidity are definitely starting to form below here. Let's go to the 1 hour, see how price traded. Traded lower again. Look at where we're consolidating around that daily fair value gap. Now this is important because what it's doing is it's rebalancing this range. So we're delivering on the downside, upside, downside, upside. So preferably we want to see it deliver on the downside, right? So once it trades back through it, we want to see it act as resistance to propel price lower. But until then, price likely will continue. Maybe take out this swing high. We have a bearish order block here to keep an eye on for us to start looking for potential shorts. Another thing to take note of is, let me just see. So this high, let me just zoom in a little bit. This high is higher than this high. So you can see that that high is higher than that high. What does that mean? This is the last up close candle before the down move. So we can look at a breaker. We got a high, we got a low, we got a higher high, and then price is delivered to the downside. So what are we watching? We're watching this candle, and what does that line up with? The midpoint of that wick that we just drew out on the daily. So again, we want to see and anticipate price to trade into this to hunt for shorts. What we can do as well is we can actually drag out the volume of that, because this is now a breaker block. Yes, we've already traded to it here, but again, I would not be the slightest bit surprised if price wanted to touch it again. Very common. So now as price trades into that, we can hunt for shorts, expecting a run lower into sell stops. Let's go to the 15 minute. Again, assuming dollar wants to trade lower. If this high gets taken, this is what we would call engineered liquidity, because it's been placed there knowing that price maybe in the Asian session or the London session will come up, tag that, running out any orders above there before displacing lower. But you'll see how very ugly GBP's been today in general, so that's quite interesting. Furthermore, that daily volume block I just drew out, no, it's not daily, sorry, hourly. So this white box, if we drop down to the 15 minute, you'll see that lines up with a fair value gap. So what does that make this fair value gap? It makes it an inversion fair value gap. What does that mean? It means that when price trades to it, we should also see this act as resistance. So now we have 3 different levels or 4 different levels of, PD arrays that are at this level. And I'll run us through it right now just to explain what I mean by that. We have this bearish order block midpoint, which is mean threshold, that should provide resistance. And then on the hourly, we have this as the breaker, high, low, high, high, last down close candle. So that should provide resistance, lined up nicely with that mean threshold. And then even on the 15 minute as well, we now have an inversion fair value gap. Why? We deliver on the upside, deliver on the downside. So when price trades back up to it, we anticipate resistance. Now, I'm not saying it's going to happen, guys. We're just speculators, right? But generally speaking, that's what I would like to see if we are to continue lower and dollar is to continue to show the strength that it's been showing. So that's what I'm going to be looking for moving into London, preferably a trade up higher with a hunt for shorts. Let's now finish on Euro. Euro is where I've done my trade. If you haven't watched the trade execution today, make sure to go watch it. I'll link it in this video, guys. Let's see. Let me just get rid of whatever we don't need. So you'll see Wednesday traded lower, running out stops below this low. and then we traded right back up, which is completely fine. And again, this big massive candle should act as a bearish order block because we traded through it on the downside. But I wouldn't be surprised if we did want to come back one more time into that weekly consequent encroachment. But let's go to that 4 hour, and you'll see our price has just pinged right off of that weekly inversion fair value gap. Again, I do think this is all manipulation, so I advise you to be careful and don't fall for it, so to speak. Easier said than done. And what we're going to look for is the breaker again. We've got a high, we've got a low, we've got a high, and then what's happened, price delivered to the downside. So what we're looking for, the last down close candle, which is here. And we can look at this candle as well as a potential draw. But generally speaking, I'm watching this level, which lines up again with that weekly consequent encroachment that we've already traded to. So let's go to the 1 hour, see if there's any better PD arrays. You can see we've formed some relative equal highs now above here. So that's what we call buy side liquidity. There's going to be stops building above there. So price may want to snatch that. Slight fair value gap right here. I'm not calling highs, guys. We're just speculating. We'll make that red. So price may want to tag that, trade into this, and then we can again start hunting for shorts. Assuming, remember, we need to know that dollar wants to move lower. So all of this, which I'm showing you right now, is only applicable if we do see dollar do what we want to do, and that is come down back into this range, find the support it needs, and trade higher. The very lowest I'd want to see dollar trade is going to be to these up close candles right here, and the reason for that is because this is like the first breaker: low, high, low, low, and then price broke to the upside. So I am also going to draw out this level on dollar, because I wouldn't be surprised if dollar wanted to be extra, trade down, touch that level, and find a nice reaction off of it. But these levels in general should be very sensitive. So hopefully I'm making sense, but I'm going to break down one more time. So long as dollar comes down and respects this level and this range in general between here and here and starts to trade higher, we should be able to hunt for shorts above this buy side liquidity within this range with an expectation to run lower and into these lows. Same with GBP, we can expect pound to trade higher, run out this stop with an expectation for shorts to run lower into these lows. But yeah, and we do have high impact news as well, so that is what's going to hopefully move the market and drive it in the directions we're anticipating. So yeah, that's going to be everything, guys. I hope that made sense. Don't forget to smash that subscribe button. Join us on the Discord, because I've updated some stuff in there. It's a lot more stuff going on in there. And yeah, catch you tomorrow. Peace.